Welcome back to the CryptoBot channel, everyone. My name is Josh, and in this video, I'll be talking about what a worst case scenario would look like for Bitcoin and what prices I'll be targeting in that worst case scenario. So this video will be an important one to watch all the way to the end. Now, starting the video off on the daily Bitcoin chart, looking at our Fibonacci retracement tool from the January low up to the local high, what we can see here is obviously a confirmed break below the golden pocket, which was sitting at around $37,000 to $38,000 per Bitcoin, and we just got a daily candle close at around $36,500 over the past 1 day. And obviously, those of you who follow me over on my Twitter, you would already know about this. So if you want to stay up to date at all times, make sure to follow me over there for extra updates just like this. And you can find a link to my Twitter in the description down below and also in the pinned comment. But anyway, I've been mentioning for a while now that if the Bitcoin price confirms a break below 37,000, below that golden pocket, then that would increase the probability of the Bitcoin price heading back towards those January lows again. And at the time of recording this video, already the Bitcoin price has pretty much revisited that February low. And we're currently finding a bit of short-term support around 35,000, which is where the 78.6% Fibonacci level is sitting at. But keep in mind, this 78.6% Fibonacci level is technically not as significant as the golden pocket, which means even though the Bitcoin price is currently finding some support at 35,000, we might not find as much support here compared to at 37 to 38,000, which is why I've been mentioning if we break below that golden pocket, which we have now, that increases the probability of the Bitcoin price revisiting these previous lows back earlier in this year. So basically, the main levels of support that I am focusing on at the moment for the Bitcoin price is at around 35,000 once again, and then anything below that, I'll be looking towards 33,000. And this daily Bitcoin chart basically tells the same story. Obviously, for pretty much the last 1 week, the Bitcoin price was in this more neutral price range in between around 40,000 and 37,000. And obviously, at the moment, the Bitcoin price is choosing the bearish scenario over the bullish scenario, which would have been a breakback above around 40 to 40,500. And looking in the daily Bitcoin price oscillators, first of all, the daily Bitcoin RSI is currently not showing many signals. It's simply just trading sideways, but keep in mind, the Bitcoin price just broke an important level of support, and the RSI is not oversold on the daily time frame just yet, which technically means there's still some more room to the downside here. And looking in the daily Bitcoin MACD, right now this is still sitting in the red. We had one false bullish cross just the other day, but as of today, the Bitcoin MACD on the daily time frame is technically more bearish than bullish because the histogram is in the red and the MACD itself is slowly trending to the downside. But currently we don't have a lot of bearish momentum, which is very interesting, especially because of the fact that this bullish divergence on the 12-hour Bitcoin chart is now officially invalidated. And once again, I mentioned yesterday that this would be the case if we see a candle close below 37,000. And obviously we ended up seeing that, as well as the RSI putting in a new lower low on the 12-hour time frame. And obviously, if you're looking at all of the Bitcoin price action this year, these bullish divergences are more accurate than they are inaccurate, because obviously we've seen 3 very accurate bullish divergences, and this is the first inaccurate one this year on this scale, which goes to show that no one indicator is 100% accurate. It's just a probability. And so the aim of the game is just to try and find patterns that are more accurate than inaccurate. Now, with that being said, it is not all doom and gloom. For example, Bitcoin is obviously not dead or anything like that. I know a lot of people, especially new investors, think that Bitcoin just dies if the price goes down. But this chart right here is the Bitcoin hash rate over the past 3 years. And right now it's basically at all-time highs, which basically means that the Bitcoin network itself is the strongest it's ever been before. Right now, it is more secure than it's ever been before. And whether or not the Bitcoin price goes up or down, that does not necessarily have a direct impact on the hash rate and Bitcoin's network. So basically, if you want to know if Bitcoin is dead or alive, you need to look at the Bitcoin network at its on-chain metrics. Because like I said, if the Bitcoin price is down today, even after a massive crash in the Bitcoin price, that does not mean the Bitcoin network is dead at all. And of course, another positive thing about bearish price action is the opportunity that comes with bearish price action. And now, talking about a worst case scenario, if we do end up taking out all of this support that I've been talking about and basically break the January low at 33,000 and head back towards around 30,000, which are the lows at the middle of last year, then in that worst case scenario, personally, I'll be targeting these 2 moving averages. But it is important to mention that I'm not saying this scenario is definitely going to play out. All I'm saying is if things stay bearish, so for example, if the stock market keeps dumping or something like that, and if the Bitcoin price continues lower, then I'll be targeting these moving averages as a strong buy point for me personally. Of course, that is not financial financial advice. I'm just telling you my personal strategy. But until then, just by default, I'm currently slowly dollar cost averaging into Bitcoin and holding for the longer term as my long-term Bitcoin strategy. Now, you might be wondering what these moving averages actually are, and the green moving average is the 1,000-day simple moving average, and the red moving average is the 200-week simple moving average. And historically speaking, when these two moving averages converge together, basically when they squeeze, it means we're in a more bullish time period when we're coming close to a distribution time period. Basically, a time in the market where historically speaking is a good time to think about taking some profits off the table. But on the flip side, anytime these moving averages create a significant gap in between each other, historically speaking, those are some amazing times in the market to accumulate Bitcoin. And historically, the best possible times to buy Bitcoin have been in between these moving averages. So basically, when the Bitcoin price drops below the 1,000-day moving average, and usually the 200-week moving average, the red line once again forms the bottom for the Bitcoin price after these significant pullbacks. And right now, these two moving averages are coming in between 28,000 and 22,000. But keep in mind, that is not a stationary price target because obviously they are moving averages. It is a moving target. So for example, in a month from now, the 1,000-day moving average might be sitting closer towards 30,000 instead of 28,000. And once again, I'm not saying the Bitcoin price is definitely going to those prices. I'm just saying if we do go to those prices, personally, I'll be buying a lot of Bitcoin in that region because once again, historically speaking, anytime you've dollar cost averaged into Bitcoin, when the Bitcoin price is in between these moving averages, those are some of the best possible times to accumulate Bitcoin, especially if you're holding for the longer term. And just giving you a quick update on the US stock market today, and this right here is the Nasdaq 100 index on the daily time frame, and obviously we're still heading a little bit lower after the break below 13,000, which is not a good sign because also the daily RSI has just gotten a rejection from this previous line of support, now acting as resistance. But speaking about the daily RSI, something interesting to consider is the fact that the daily RSI at the time of recording this video is still forming higher lows, while the price action itself in the Nasdaq 100 index is still forming lower lows, which is technically a bullish divergence, and this is more visible on some smaller time frames like this 4-hour time frame. So as I said, this is just something to keep in mind because it could result in some reduced bearish momentum. And if you want to continue to make profits in crypto, whether or not prices are going up, down, or sideways, then these two videos popping up right here on your screen are definitely for you to watch. Because in both of these videos, I reveal how I continue to make money in crypto, whether or not prices are going up or down. But anyway, that is it for this update. I really hope you enjoyed, and I'll see you all in the next video.